No single issue will have as huge an impact on our generation and the next as climate change. So keeping a spotlight on this issue, as we are doing today, is great, or as my friend Arnold likes to say, fantastic. Everyone here has played a role in California's status as a leader in environmental protection and climate change action. That status has regions across the US and the globe looking to us, which is why today's primary focus is lessons learned. And from those lessons learned, what we can share to help other regions move forward smartly, as well as help advance our own state's leadership. Obviously, it would take a 3-month symposium to fully address all the lessons we have learned. So today, we choose to focus on the most relevant issues in today's climate debate. Those who are trying to stop efforts to address climate change and reduce greenhouse gases in our state, in Congress, and elsewhere say, well, maybe the science proves there's climate change occurring, but we cannot afford to do anything. They say it hurts the economy and it will cost jobs. That is why we just had an academic panel focused on the economic costs of climate change. And in your program, that is why we listed other research relevant to that issue as well. As policymakers and the public hear about the possible costs of addressing climate change, it is important to highlight the research and data on the high cost of not addressing it. And now we will hear about why addressing climate change is in fact good for business. We get why those businesses making billions of dollars selling fossil fuels do not want any action to reduce dependence on fossil fuels. We get that they commit some of those billions of dollars to fund legal challenges, political fundraisers, and advertising campaigns to scare working families. So it is important that we spotlight all the other businesses and corporate leaders who do not make their bonuses and profit and loss selling fossil fuels. Today, however, we will not be including green and clean tech, such as solar, wind, and renewable energy businesses. While these businesses have added over 300,000 jobs in California in the past 5 years and brought over $223 billion to California's economy and attracted more venture capital to California than anywhere else in the nation, today we do not want to focus on this sector. Instead, we focus on the American businesses that are the largest and most respected in the world and are not associated directly with the new green economy. We focus on these companies, which are major contributors to California's $2 trillion GDP. We do this to directly refute those who say addressing climate change is not good for business and jobs. And while we have 3 such companies here, there are hundreds of others embracing sustainability, huge job creators that are household names. Bank of America, Wells Fargo, Allstate, Best Buy, Coca-Cola, Pepsi-Cola, eBay, Intuit, Toyota, Ford, Gap, Levi Strauss. The list goes on and on. So let's get this discussion going. And to do so, please welcome to the stage from UPS with over 395,000 employees and $55.4 billion in revenue, Michael Britt. From Apple, with over 50,000 jobs at Apple and supporting over 250,000 other jobs and over $170 billion in revenue, Lisa Jackson. And from CalPERS, the largest public pension fund in the US with over $300 billion in assets, their CEO, Ann Stossball. Please welcome to the stage. And while they take their seats, since today is about lessons learned, I just wanted to say that having had the privilege to serve as senior advisor during Governor Schwarzenegger's administration and been involved in the AB 32 negotiations, one of the big discussion points in passing AB 32 was who should have the authority to implement AB 32. And it was decided that the Air Resource Board should. And that's an important lesson when we're talking with other regions about take care with who you empower to implement these regulations. And I have to also say, before we start this, that there is no single person with the unique skill set more qualified to take on this challenging job than the great Mary Nichols. Okay, let's get going. Well, the name of this panel is Why Addressing Climate Change is Good for Business. So I'll start with Lisa Jackson at Apple. Lisa, why is it good for Apple's business?
Well, for lots of reasons. First, because our customers expect us to innovate and solve tough problems. You know, we make products that are beautiful, but that are also easy to use. And the engineers and technologists and designers at Apple take it as part of their mission to look at all the issues that we face and that our customers face. So for us, it's pretty fun to be able to look at climate change and all the challenges as opportunities. And probably there's no better way to answer that question than to give an example of the kind of opportunity we see, which is around the deployment of clean energy. Apple has 4 data centers. One of them's here in California, and every single one of our 4 data centers runs today on 100% clean energy. And folks say it can't be done, and one of the things we love to do, I think, is to turn can't into done.
Before I go on, Lisa, I have to ask you another question. Lisa came to Apple from being the head of the Environmental Protection Agency for the United States of America. So we all can only imagine the number of companies that were trying to get you. So other than the obvious reason, Lisa, of getting to see all the Apple products before they go to market and probably really good stock options, why did you go to Apple?
You know, it's a matter of scale. I did have the privilege of running the EPA, an agency I actually started my career at 20-some years before. And so to think about where you go after that, that honor and privilege, and you know, sometimes a little bit of a tough job, but always, above all, an honor. I wanted to go somewhere that had scale. You know, the thing about EPA is that you can make a decision and it can have huge impact, not just in our country, but around the world when the agency is allowed to follow the science and use our incredible suite of environmental laws. But Apple's the same way. A big company is the same way. If you're thoughtful about the choices that you make, about the decisions that you make, and about the policies you pursue, as we're going to hear, it has scale. And so it's just been a really interesting and exciting transition to be able to see and exercise something I always said, and I heard the governor say again, you don't have to choose between the economy and the environment. You never do. If you find yourself doing that, you're asking the wrong questions. Challenge yourself to think beyond that.
Thanks, Lisa. Mike, UPS, you have over 100,000 vehicles in your global fleet. So other than the obvious reason why UPS wants to get the cost of your fossil fuel use down or the use of fossil fuel down on your cost, why is UPS focused on this?
Well, we understand, as being the largest logistics company in the world, that we need to be stewards to the industry as well as to the environment. Our employees are passionate. We have about 400,000 employees, very, very passionate about treating the environment properly. You did mention the economics of it. From an economic standpoint, obviously, the more fuel efficient we are, the less fuel we burn, the less it's going to cost us to serve our customers. I did want to mention on the economic side as well, California has been the model that we've taken basically globally. We've taken the ARBs, different programs to South Coast Air Quality Management Districts, the other air quality management districts, and we've taken them globally. We've talked to folks in China, Hong Kong, and of course the other 49 states here through advocates like CalSTART and other organizations we're part of that are trying to let them understand California gets it. All you have to do is just follow these simple steps, and we'll be able to deploy more and more alternative fuel vehicles. So we've been part of the alternative fuel infrastructure in California since the 80s. And we're proud to say we've been part of that, and we're proud to say we advocated throughout the world, and we're really getting traction globally on this right now.
All right, I'm going to ask you a question that deals with what a lot of us are kind of buzzing around and pretty frankly angry about that we've heard the last few days. As we know, as I even said in setting up this panel, the oil companies that make billions of dollars on selling fossil fuels have launched legal challenges which they lost on not being included in California's cap and trade. And they're doing scare advertising to try to scare working families that the cost of gas is going to go through the roof. And it's probably no coincidence that that's made extra news the day we're having our symposium on why this is an important thing for California to lead on. So they're out there, even though we know that the oil company, I think they're calling themselves concerned drivers or something, is the coalition. But they are funding this campaign claiming that gas prices are going through the roof. So here we have a man representing UPS with 100,000 vehicles. So why are you not concerned? Why is UPS not concerned that standing with California's leadership on climate change and addressing it isn't going to result in a problem for you, but just the opposite?
Well, from an engineering perspective, internal combustion engines do not work as well as electric propulsion engines. Now, I'm not saying battery vehicles, but I'm saying when you look at efficiencies, so we know that ICE motors are not going to be here forever and ever. They're basically a bridge. And there's going to be, we're going to be putting out 17 fuel cell vehicles in this state in the next 15, 16 months through a research and development program with the California Energy Commission. We're very proud to be part of that. And these rolling laboratories, if you will, they're not painless. You know, they are painful. You need to understand that, you know, we're going to have interruptions in service. We're going to have engineering challenges. There's going to be things that go on, but we need to go ahead and develop that so everyone else could use it.
Thanks, Mike. And, okay, largest public pension fund in the United States, $300 billion. Most people would think the only thing that as CEO you really need to care about is return on investment, period. Why are you a leader? Why is CalPERS so focused on sustainability?
Thanks, Bonnie, and thank you for inviting CalPERS. Thanks to the Institute and the Air Resources Board. We really appreciate it. A lot of times people ask what a public pension fund is doing, being involved in climate change, so I'm happy to answer that. What we do, our mission is serving the people of California, delivering retirement benefits to 1.5 million public sector workers. To do that, we have an investment portfolio of $300 billion. That's our current assets under management. We're invested in over 9,000 companies throughout the world, 47 countries. We're also in private equity, real estate, fixed income. Our goal is to earn an average annual 7.5%. Return, which is a tall order. For every dollar we pay in pensions, 66 cents of that comes from our investment earnings. So it's a huge responsibility. Sustainability really, in its broadest sense, is at the heart of what we do. Sustainability of the fund, sustainability of the companies that we invest in. We're actually, Apple is our largest holding. We have $1.2 billion invested in Apple right now. Big investment in UPS as well. Two of the core beliefs that we have at CalPERS around our investment policy are that risk is multifaceted. It's not just about traditional things like tracking error and volatility. We've got to look at big external factors like climate change. And we also believe that in long-term value creation of the companies that we hold, because we hold them for a long time. We're not in and out investors. And we believe that our companies have to effectively manage their financial capital, but also their human capital and their physical capital, including resources. So we heard today about the science. The potential impacts are huge on all the sectors that we invest in: technology, manufacturing, agriculture, energy, insurance industry, just to name a few. It's really staggering. And then we also see the opportunity side of climate change, the opportunities to invest as the world moves to a low-carbon economy, to invest in energy efficiency and new ways to distribute products and services. So given all that, what do? We deploy our capital with these things in mind. In our global equity portfolio, we've got a tilt. So we have more exposure to companies that are doing the right things and that are looking forward to how they're going to position themselves in a low-carbon economy. We have a significant investment in private equity and clean tech. We were one of the early investors in the green wave in California. We asked our real estate managers to decrease their energy output. Over 5 years, they've done that. And then we're also very involved in the policy side. We worked with Ceres to get the SEC to require companies to disclose risk. around climate change, along with everything else they disclose. It's really important for investors to understand that risk. We're very supportive of the EPA rule to curb emissions on power plants. We are sending a letter today to Gina McCarthy in very strong support of the rule. But really the sea change won't come till we have market signals around carbon. We need that carbon pricing. It's critical so that investors can quantify risk and evaluate risk, critical so that companies, market participants have incentives to get into clean energy. So we're advocating for that. We'll be carrying that message to the UN summit in a couple of weeks.
And thanks, and I'm going to come back on Ceres because Ann also co-chairs Ceres, and I want to ask more about that and all the companies in that and why they're so focused on this. But because you bring up from a business perspective the policies you advocate, I want to go to Lisa because you both had a major policy hat and now you're at Apple. So from a business perspective, from Apple's perspective in particular and a business perspective in general, what do policymakers need to know that are going to be important for businesses to be able to move forward on this and do well and help keep expanding their business and jobs, but also address climate change?
Yeah, that's a great question, Bonnie. I think a couple of things. Let's start with Apple. To use our products or for us to be able to supply our services like Siri or downloads in iTunes takes a lot of energy. And we're really proud of the fact that a lot of the things we do have changed the way people think about things like music or data or corresponding. But we want to make sure that change is sustainable and smart and looks to the future. So what's really important to us? Stable, reliable sources of energy at prices that are competitive, that make sense. And that's exactly what we find in the current clean energy market. So one of the things I would say is I could certainly put my old hat on and say there's a lot more stability and reliability we'd like to see in terms of policies, not going away, not coming and going, but it can be done right now. That's why we do it. We enjoy doing it. It makes us feel great. If you go on our environment site, apple.com/environment, you can get a sense of how important these issues are to us. But it's also great business for us. So that's what you need to know. It can be done right now. We can challenge ourselves and each other to do it and to deploy those right now. We have a manufacturing facility that we're in the process of building in Arizona that's going to run on 100% clean energy from manufacturing. Manufacturing can be clean as well. And so it's important not to get caught in the nose and to remember that it's really a matter of continuing to support those businesses. Prices and market indicators are great. And I'm sure a lot of businesses would echo what Ann just said.
All right, so I'm going to follow up only because of the unique role you've had on being on both sides of this, and that is when you say everyone understands the sustainable, predictable policy. Is there one or two policies you can point out that you think from the business community would be most important for policymakers to signal consistency on?
Well, I'm wearing my Apple hat. We were really proud to join Ceres in the California and the U.S. Climate Declaration, which was a pretty simple statement, but it said climate change is a challenge, but it's also an incredible opportunity for job creation, for growth, for research and investment, all the things we do so well in the United States, right? And that, as I'm a new resident of California, can't believe it took me so long to get here, but that California does so incredibly well. So yes, we have to keep investing in the research, in the technology, in those things that are going to continue to show the cost curve for all these renewables to go down. Energy efficiency, I absolutely agree that we have not nearly, mined all the benefits out of energy efficiency policy as we can, and that's just smart business. Who wants to use any more energy or any more water than they absolutely have to? And when you're talking about paybacks that are pretty short, there's still opportunity there as well.
Mike, you mentioned, Lisa just talked about the importance of investing in research and innovation, and whether it's government or the private sector. UPS is doing that. You mentioned that earlier. And you're saying like it's a rolling laboratory and it's not easy and sometimes it doesn't pay off. So I'd like to, if you could address why are you doing it? What are the top areas you're looking at in your research investment? And to continue, because of the policymakers and the policy overview of today, what policies, Ann mentioned carbon pricing, what policies from UPS's perspective would be most helpful to your leadership role in addressing climate change and sustainability?
Just to start with that, we've been a member of Clean Cities for many, many years, and we're a national member of the President's Charter Committee. So we understand from a business perspective, a lot of customers, and you might know the term SmartWay out there, customers go to SmartWay to see where your SmartWay rating is at, and they want to see how clean you're going to deliver their packages. We're the only logistics company in the world that give you a carbon footprint of your package from Los Angeles to Maine. We could do that, and we could do it carbon-free. So we understand the importance from a marketing standpoint. We understand that that's a market, that product is out there is marketable. Secondly, from our perspective, from our rolling laboratory, we've been doing this for many, many years, and my office in Atlanta sits right next to the UPS archive. And I go over there from time to time, and they have electric vehicles that we were running in the 30s, and the same thing we're looking at today. How many miles did he go? How many packages did he deliver? What was the state of charge in, state of charge out? Same exact things we're looking at today. So we've always were looking for ways to get ahead, to make sure that we're delivering our package to our customers in the most economically responsible way, as well as environmentally responsible way. So the rolling laboratory continues on. We're going to purchase every single Class 8 in our U.S. small package operations. Every tractor will be a natural gas vehicle next year. We understand the economy of scale. When we make a statement like that, they can start to produce those vehicles a lot cheaper. As you may not know, when you buy a LNG tractor or LNG package car, they have to hand build most of that. So it has to come off of the line, so it gets built like a Rolls Royce the rest of the way. So you cannot get the economy of scale. If we were to have fuel cell vehicles, just as many F-150s that are built in the U.S., fuel cell vehicles, they would cost about 30% less than in ICE engines. So that the economy of scale is the main thing. And when we raise our hand and say, hey, we're going to do this, we hope that other folks will jump on board and it'll lower the economy of scale on the whole supply chain, all the way across. That's our intent. And we've been successful with that with the LNGs and the CNG vehicles. You're going to see us do that with fuel cells. You're going to see us do that globally with other opportunities throughout the world to basically take the California model and use that, because at the end of the day, there needs to be some type of incentive. And the HVIP program that we have in California is just a perfect model. It just is that little tip to put it over the end. But then pretty soon we're going to go back to our controllers and they're going to say, why are you not buying these more fuel-efficient vehicles? Because the total cost of ownership is much cheaper. And the only way we get there is economy of scale. And us being the leaders, we're stewards to that. We need to be the first ones out front and say, yeah, we're going to do that. So other companies, and we don't care who else jumps on. We want everyone to jump on. We don't consider that our IP. We just consider that the right thing to do. So everyone will have a lower economy of scale on all vehicles.
Thanks, Mike. Ann, economies of scale, he hopes others jump on. Let's talk about your hat as co-chair of Ceres, which is an organization of many of our largest companies and socially conscious companies in this country. What are some of the things that Ceres doing that, and first of all, why are so many of these businesses, some of which I named when I set up this panel, interested in this? And what are some of the projects Ceres doing that helps with scale, as you've heard both Lisa and Mike talk about, and other carbon assessments?
Thanks. So Ceres is, for those of you who don't know, is a nonprofit. It's headquartered in Boston, and it's a coalition of environmental groups and investors, and the mission is to mobilize sustainability leadership in the financial industry. So we do a lot. We have a lot of companies. They sign up to be a Ceres company, and then Ceres engages with them on a broad range of sustainability issues. There are companies that are committed to sustainability and to doing the right thing. Ceres also has an investor network on climate risk, which is has investors with trillions of dollars in assets working to deal with, address both the opportunities and the risks associated with climate. So one of the initiatives that we're working on is, we call it the Carbon Asset Risk Initiative, and it's really designed to deal with the fossil fuel industry. It's a coalition of about 70 investors from throughout the world with about $3.5 trillion in assets. And what we're doing is engaging the 45 largest fossil fuel companies in the world. The goal is to get them to start analyzing the risks, financial risks that they face from climate. Right now, research shows that the world's largest fossil fuel companies are spending $700 billion a year to identify and develop new reserves. And so the concern that we have, we call it stranded assets. And it's what's going to happen to these assets. The demand for coal in the US is declining. Oil costs are increasing in order for new oil projects to break even. A lot of companies, coal companies' stock is decreasing. So we're concerned about, as we move to the low carbon economy, which is inevitable, what's going to happen to these assets? What does that mean for the shareholders? They're going to be either low value or unusable. So what we've asked the companies to do is to do scenario planning. We want them to analyze a scenario that's business as usual, and then analyze a scenario where we get the carbon pricing, move to a low carbon economy. We've asked them to do that, disclose the information to investors, and then we've also asked them, how is your board of directors involved? Because we think that governance piece is really important. So to date, we've heard back from most of the companies. We've asked them to do this for next year's annual meetings. We've heard back from most of the companies, and it's interesting. Most of them acknowledge now that climate change is a risk. Some of them acknowledge the science, not all, not many. And then the general trend is really their view is that the movement to a low carbon economy is not likely. So we'll be curious to see whether they're willing to do the scenario analysis.
First of all, why are so many of these businesses, some of which I named when I set up this panel, interested in this? And what are some of the project series doing that helps with scale, as you've heard both Lisa and Mike talk about, and other carbon assessments?
Thanks. So Ceres is, for those of you who don't know, is a nonprofit. It's headquartered in Boston, and it's a coalition of environmental groups and investors. And the mission is to mobilize sustainability leadership in the financial industry. So we do a lot. We have a lot of companies. They sign up to be a Ceres company, and then Ceres engages with them on a broad range of sustainability issues. There are companies that are committed to sustainability and to doing the right thing. Ceres also has an investor network on climate risk, which is has investors with trillions of dollars in assets working to deal with, address both the opportunities and the risks associated with climate. So one of the initiatives that we're working on is, we call it the Carbon Asset Risk Initiative, and it's really designed to deal with the fossil fuel industry. It's a coalition of about 70 investors from throughout the world with about $3.5 trillion in assets. And what we're doing is engaging the 45 largest fossil fuel companies in the world. The goal is to get them to start analyzing the risks, financial risks that they face from climate. Right now, research shows that the world's largest fossil fuel companies are spending $700 billion a year to identify and develop new reserves. And so the concern that we have, we call it stranded assets. And it's what's going to happen to these assets. The demand for coal in the US is declining. Oil costs are increasing in order for new oil projects to break even. A lot of companies, coal companies' stock is decreasing. So we're concerned about, as we move to the low carbon economy, which is inevitable, what's going to happen to these assets? What does that mean for the shareholders? They're going to be either low value or unusable. So what we've asked the companies to do is to do scenario planning. We want them to analyze a scenario that's business as usual, and then analyze a scenario where we get the carbon pricing, move to a low carbon economy. We've asked them to do that, disclose the information to investors, and then we've also asked them, how is your board of directors involved? Because we think that governance piece is really important. So to date, we've heard back from most of the companies. We've asked them to do this for next year's annual meetings. We've heard back from most of the companies, and it's interesting. Most of them acknowledge now that climate change is a risk. Some of them acknowledge the science, not all, not many. And then the general trend is really their view is that the movement to a low carbon economy is not likely. So we'll be curious to see whether they're willing to do the scenario analysis. We're going to continue to engage with the companies assertively. We don't expect them to change overnight, but we expect progress, and we'll continue to go at it.
I'm going to do a quick follow-up, because we have a lot of student leaders here in the student sustainability movement, and I hearken back to, because you talk about the companies that CalPERS invests in, and that you're a powerful investor, which gives you influence. And I remember thinking back when I was a young college activist, I was a Ralph Nader Raider, and one of the philosophies they did was actually buy like 1 share of stock in all the companies they wanted to have corporate responsibility, and go and at the shareholders meeting to push them. That was as a 1 share activist. With your powerful leverage, what are some of the things CalPERS is doing that others that are investors and people with investment dollars can also be doing to help influence those companies you're invested in?
By the way, I was a Raiders Nader too.
Oh, really?
So we can talk about that later. You asked about divestment. So we're a very long-term investor. We are holding our portfolio for many decades. We have to pay benefits for many decades to come. We're not an in-and-out investor. So our policy is not to divest. We really believe that by staying at the table, engaging with these companies, using our power and our clout, that we can get change. And so that's, we call that engagement. Along with that, we do shareholder resolutions on key issues, including environmental issues, asking companies, for example, to set targets around GHG emissions, do more disclosure. So engaging just on a broad range of sustainability issues. We invite not only investors to join us, but all stakeholders. Environmental justice came up. The human rights issues associated with climate are hugely important. It's important that those are at the table with us as well.
Thanks, Anne. And even though you represent some of the most respected investors and businesses on the planet, a couple of weeks ago when Mary Nichols, Terry, and I were over at Arnold's house briefing and strategizing for today's event, one of the things that Arnold said to us is, you know, sometimes, and we all know this issue can seem very overwhelming to the public at large. You hear the science, and and you feel like, well, what can anyone do? We heard from Dan Kamen on his calculator for individuals. You talk about UPS is able to do that in tracking a package. Let me go to Lisa and Apple, because Apple is one of the most customer-connected, knowing what people want of all ages, young and old. So what, from Apple's perspective, because I know there were a few apps that customers use that actually help them with this. So as we're coming to the end of this discussion, let's all focus and start with you, Lisa, on what individuals can do, because it all adds up and makes a difference, and how Apple, through some of the apps and such, can inspire people to helping individuals reduce their carbon footprint. Not everyone can be Ed Begley. Some need help from, so.
You know, we do. We have the App Store, and we're really proud of a lot of things about the App Store, including the fact that it's made so many entrepreneurs. It allows people to be business women and men with very little except their own ingenuity and a great idea. But it also allows for collective action and for education. So a lot of times I like to use favorite apps. People often ask me, well, what's your favorite green app? They're, they're not favorites, but a couple I'll highlight today is Paper Karma. You'll like this one. Sometimes you might get mail that you don't actually want. All you do is you take a picture of the cover and the little barcode, and they take care of unsubscribing you. There's, as we now know, there's quite a bit of greenhouse gas associated with moving things around. I mean, obviously you never do that with UPS's packaging, but this is for mail that you might not want. Speaking of karma, there's Karma Carpooling, which is, it's all about the ride share, which helps you in your own area figure out ways to share rides so you can cut your carbon footprint that way. We have another popular one called Julebug, which is kind of a gamified way of learning ways individually to change things. And I know that sometimes that individual action, the reason it's hard is because it feels small. But I cannot tell you how many times as head of the EPA, someone came up to me and said, it was some little thing that someone asked me to do that made me realize how important it was, and now I'm a lifelong learner.
With that, we also have a metrics as part of our scorecard for fuel efficiency improvements. And they may not just be LNG vehicles or EV vehicles. It might just be to put more packages on a trailer to cut one whole route out, to go ahead and make routes a little bit different so you're going less miles. So there are a lot of little important things that we do daily, and they're part of our business metrics as well. You know, because the cleanest miles, the miles never run. And that's what we always look at that. If we could just go ahead and don't run that mile, for whether we could do it on a bicycle, a golf cart, or we could just do it with a walker, or put more on certain loads, it really does help us along the way. But I did mention our employees several times. We have 400,000 passionate employees about the environment. Well, every single new building in UPS is going to be solar panel capable. Wow. Because as you well know, that buildings that were built before solar panels were out weren't built with enough girth to hang all that, and it just cost a lot of money to go ahead and retrofit them. So we decided that every single building, whether they're going to be solar panel or not, are going to have solar panels on board. We've been running solar panels down in Palm Springs since the late 90s, and obviously great opportunity. We're getting the meter turns backwards, you know, and then when we need it, it just turns forwards. It's a great economic resource for us. So again, we understand that many different disciplines of engineering, aerospace, ground, industrial engineering actively pursue ways to go ahead and never drive that mile, because we understand the importance of that.
Mike's mentioning the meter turns backwards. I mean, those of you in this room probably are aware that some of that ability is a result of smart policies that have been put in place in California. And that's why in your programs, in addition to some links to some of the relevant research on the economic cost of climate change, there's also a list of some of the most significant legislation over the past decades that have actually led us to be at the forefront of environmental protection and climate change addressing. 20 seconds left. Any of you have any last words that you feel you didn't get a chance to express that you want to leave the audience with? Go, Lisa.
Yeah, never.
Our newest Californian. Come on.
You know, two things occurred to me. I did want to mention that California has made it really easy for us to do things like our entire campus in Cupertino runs on 100% clean energy. We're 94% in the U.S. of all of our corporate facilities, but California's made it so easy. There's great footprint there. And the last thing I'll say, because I always have to say it, is, you know, when people talk about costs and fuel costs, ask the communities. You mentioned that we all live and work in communities. I'm a mother of 2 boys with asthma. What any parent wouldn't give or pay to try to avoid one night sitting in the hospital hoping that kid takes the next breath. I don't want to end only on the moral issue, but it's part of it, and it's the true cost of what we're doing that we all have to be aware of.
Perfect note to end on. Thank you all.